Hello, everybody. Happy Tuesday. I hope everyone is having a great start to the week. Let's see who we have with us today. Hello, Emelida, Francia, Edwin, Juan, Andrew. Hope everyone is doing well. Vero, Kira, I already knew that you were here. Hopefully, everyone is having a great start to the week. I have a lot of stuff to share with you today. A lot of it will be review, a lot of it will be interesting, I hope. But I want to show you how you can take something that we've covered as something of almost a rule or a guideline to follow and really make it yours. And today what I want to do is I want to show you how I make this information mine. I will first start off by saying everything I will be sharing with you today is my opinion. This is not financial advice. I am not authorized, nor will I offer you financial advice or tell you what to buy and sell. I will only be showing you what I think and then making trades in our paper money portfolio accounts. Remember that the account that I'm going to be trading in is part of a group that we have set up for the Sector's Mid Simple subscribers. I will be posting the link in just one moment so everyone can join that competition group, call it what you want, but you guys can participate as well in a way that is fun, easy, and safe for everyone to get involved, explore a little bit, take some more risks than they may with an actual portfolio, but all in an effort to learn as much as we possibly can. So here is the link in chat right now to our stock group. So everyone can join that. And that is what I'm actually going to be doing all of these trades today in. So without any further ado, I think that the best place to start is where I usually start my search, which is the matrix. I like to look at the matrix every single day because every day it changes. It is our way of knowing, not yesterday, not 2 days ago, today, who are our leaders? What sectors are leading? What sectors are falling behind? What sectors are gaining ground? And what sectors leave something to be desired? So let's look into this a little bit. First thing I want to do is I want to start off by using something that all of you would be familiar with, which is our 2-week case study that we show on our website. We follow that case study, which has 2 main rules. The rule is that you set your chart here, your previous matrix, to be the 2-week ago matrix, and then you sort by X count. You want to find a sector that has an X count of greater than 2 with a positive trend of 10 or more in the current matrix. So again, we're going to be looking for a sector that has greater than 2 here, which would be XLU, B, LRE, I, and V. And then we come over here and we see discretionary, XLY, B, C, I, and then the SPY. So our requirements would be a X count greater than 2 and a positive trend of greater than 7. So we would exclude SPY in this. So the ones that we would be looking at here are discretionary, building materials, communications, and industrials. Now, this again is just a very easy cookie cutter that you can put over the matrix to get information out of. But there's a lot more that goes into a decision that I really want to talk about with you all today, which is we also now offer BPI on the matrix. How do you use BPI in addition to this information? The best way I like to use it is 2 things. BPI tells us the percent of companies in that market that are on a buy signal, but also the direction. Is it going up or is it going down? Let's quickly look. Instead of sorting by positive trend, I want to look at the total count. And I want to take the highest performing sectors on the total count and see if we can find something interesting when we look at their BPIs. So to do that, I'm just going to make this a little bit. Let me zoom out a little bit more. There we go. So let's quickly look. Discretionary has been one of the top performing sectors for quite a while. However, its BPI in recent week or so has taken a massive hit, where it's now still in our overbought range, above 70%. However, it's in a column of O's, meaning it's on its way down. And to better see how it's been doing, I'm going to click here on BPI charts and then scroll down to View XLY chart, which will give us the discretionary BPI chart. Scrolling down, we can see what that chart looks like. And we see that the BPI reversed in early September from 78% down to 72%, where it is currently. Now, there was 3 top performing sectors when we looked at this chart 2 weeks ago. It was XLY, discretionary, communications, which is now at 66% in a column of X's, but also technology. And technology is really the one that I want to highlight here, because this is a chart that shows very clearly what can happen when a sector loses strength in the largely overbought range. Well, let's take a look. So just like we did for discretionary, let's highlight View XLK chart to see the BPI chart for the technology sector. Well, technology hasn't had a very good month. Technology from 74%, which is where it almost ended last month at. The main changes that we saw in technology came in the last few days of August into September. So we see that it started up at 74%, and then from there has made a straight beeline down to 48%. Now, we don't know where the bottom is. We don't know when it could bounce back up. But what we do know is that technology as a sector has begun to lose a lot of its strength that it had before. However, I want to highlight something, that a lot of those changes that we see have been in the 2-week period, where in the past 2 weeks, technology has lost a total count of 13. If we look at the 1 week, it's flat. There's been no change from this point this week to where it was last week. And if we look at the 1 day, we already see signs that technology is starting to regain some of that strength that it had in the short-term period. What does that mean to me? That means that, we didn't expect for technology to get hit as hard as it did. However, when some sectors are very, very overbought, when they're really, really high up on that little ladder, there's a lot of room for them to fall. So it fell very hard. However, technology is a sector that we would expect to be doing very well right now. So it's likely that we can see technology be a sector to bounce back. So I wouldn't just turn away from it just yet, and we'll look into it here in a little bit when we go over to look at the fundamentals. However, I want to look at a couple of other things. Mainly, what would I do if I wanted to buy just a sector? Because we've talked a lot about how sectors and sector ETFs are good medium to long-term investments because their movement is not based on one company's performance. It's not based on one earnings report. Well, I guess sometimes if you're Apple, your earnings report can cause large changes in a single sector's performance, but usually our sectors tend to be much more performance-based. How is that entire market doing? And to find that answer, I want to look at, again, the BPI as a way of knowing where the opportunities may be, but looking at our overall performance as the main thing that we look at. So let's take our top performer right now, XLB. Now, instead of just buying based on it has the highest positive trend in X count, let's look for some other information to back up that claim. Because again, I could say that same thing about discretionary. I could say, oh, discretionary is very, very high up. Why don't I buy that? Well, let's take a look. So going back to our momentum table from 2 weeks ago, we see that discretionary is negative. compared to where it was. So yes, it's doing very well, but over the past 2 weeks, it's lost some strength. Whereas building materials has taken off. Now, that to me shows that this is a sign of a sector that is performing very, very well. There's not as much room for the individual companies within it to go on buy signals because we're in that 75% BPI, but that doesn't mean that the sector as a whole doesn't have its opportunity. So what I would do from here, once I find the top performing sectors, is I would look for the opportunity. So I want to take 2 sectors and go look at what the opportunities to buy that ETF may be. So I want to take building materials, which is our top performing sector with a total count in the past 2 weeks of 7. And I want to look at XLI. Because XLI, while it's doing very well, has also gained a lot of strength over the past 2 weeks. A lot of that strength coming in just the last week. So let's go take a look at those 2 charts. So to do that, let's go over to stock charts. And here we're going to go down to point and figure. And first we're going to look at the industrial sector. Now, we are currently in a column of O's here, which we can see where white's not going to do very good for me on a white background, is it? Let's try this again. So we currently see that our current column, or our current direction, is in a column of O's. Well, I thought that industrials was gaining strength. Why is it in a column of O's? Well, because we're looking on the matrix at relative strength. That means that it could be flat in a market where everyone else is doing worse. Or it could be doing well in a market where everyone's doing okay. But we don't want to do that. Now we're looking at buying it because of the price. So we want to see that the price matches what we want its relative strength to be. So there's not much opportunity here. There could be opportunity when we see that double top breakout above this $81 mark. However, right now we're still in this column of O's. Yes, it's starting to go back up. Yes, the price is currently at 78, 71, but we're still far away from that $81 mark that we'd want to see in order to say this is a very, very strong buy signal for a strong sector. Let's now compare this to building materials, XLB. Now here we have a little bit better of a story. Here we have, clear everything. Here we have a sector that's approaching a double top breakout. It's not there yet, but it is very, very close to that double top breakout that would be a stronger indication of a buy signal. So if I had to say, I can only look at the matrix every 2 weeks, and today is the day that I look at it, what would I do? Well, what I would probably be doing is I would probably be putting in an offer for XLB. So I'm going to do that. I'm going to go over here to how the market works. I'm going to go to when you select your competition, make a trade, stocks and ETFs. And then I'm going to put in an offer for XLB. Quantity of shares, let's say, let's go 250, which would give us a total value of about $16,000. And then I'm going to put in an order at market price. Now, if I was trying to follow it completely by the book, maybe what I would do is I would put a limit order, where the limit order would be at the $67 mark. Because remember, our double top breakout point is that $67 mark. However, doing that is slightly risky where you never know what could happen when it gets to that price. I would rather be able to buy where it is now and then be along for the ride and put in my 10% trailing stop. So instead of putting limit, I'm just going to go ahead and buy at the market price and go ahead and buy that. Now, tomorrow, remember, right now the market is closed, so I can't actually go and buy this sector ETF. However, tomorrow, once this purchase order has completed, I will go in and I will put my 10% trailing stop. The way that a 10% trailing stop works is it protects you from losing too much, but it helps you protect your profits when you do make them. Where if we bought in at $67, our trailing stop would be 10% lower, or whatever percent you set, lower than that highest price. So let's use 10%. If I had a $67 company and I set a 10% trailing stop, the trailing stop would be $6.70 below that price, or it would be $60.30. So if the price fell $60 below $60.30, it would automatically sell that stock. Now, yes, you lost money, but it protected you from losing more. Now, what if the stock goes up? What if it goes from $67 up to $80? Well, now I've made some profit. I made about $13 a share. So then your trailing stop changes, where it's still going to be 10% of the highest price it's been at. So that 10%, instead of being $6.70, is now $8. And because it's now $8 less than $80, your sell point is going to be $72. So by setting a 10% trailing stop, it makes it where if you're going to lose, you can limit how much you lose. But when you make profits, it protects some of those profits, where when the stock starts to go down, it sells off, hoping that you made some money along the way. So again, right now, I put in a buy offer for XLB at market price, which is $66.33. And tomorrow, I'll be setting a trailing stop for 10% on this sector ETF. So when it falls 10% below its highest price, it will automatically sell. I don't have to be here to do it. It will automatically do it. It flushes the toilet and sackable. All right, moving right along. I'll show you that in a moment. I want to now look at companies, because now we've said all I can do is trade the one sector. That's all I want to do. What if you want to trade companies? Now here's where you have a little bit more options, but the choices are not as obvious. So I want to go through some of those choices with you all. The most obvious choice is I want to buy a leading company in the leading sector. I want to buy a company with strong fundamentals in the building materials sector. It's not always that simple, because remember how we said BPI before was something to keep an eye on? Well, here's why. We want to find a company that is recently gone on a buy signal, where that is an opportunity for us to get in when the water is still rising. So what does that have to do with BPI? Well, a BPI of 75 means that 75% of the companies within that sector are already on a buy signal. And a column of X's means that that's going up, which means that more and more companies are going up, more and more companies are going on a buy signal. But that means that most of the companies are already on a buy signal. So that means that our opportunity may have already passed. There's a way of comparing this, where building materials is a top performing sector, but there's not as much opportunity to look at the companies within it, because most of the top performing companies have already been on buy signals for quite a while. I want to look instead at a sector that's doing okay, is improving, but has some opportunities still there. So I want to look at sectors that have a lower sector BPI, but are in a column of X's. So what sectors does that leave us with? Well, if we start from the bottom, we would have finance, XLF, which has a BPI of 50.8 in a column of X's. Then we would have real estate, 63.5 in a column of X's, and communications at 66.3 in a column of X's. Now, let's head over to FinViz, and I'm going to take a couple of these sectors. The main ones I'm going to look at are building materials, because it is our top sector, so it's worth looking at. I'm going to take our worst performing, or our lowest BPI in a column of X's, which is going to be financials. And then I'm going to take my favorite sector, which is technology, which is XLK. So again, we're going to look at building materials as our top performer, financials as the highest likelihood of finding companies going on buy signals, and XLK because it's one of my top sectors personally. So let's go over to FinViz and figure out what we can do from here. So I've shown quite a few times in these classes of how to set up Be a Profit as a way of checking companies. Now, I'm not going to go through that today. I'm just going to quickly show a beta of less than 2, a 52-week high or low of 0 to 10% below the highest. Under fundamentals, we have an ROE of over 15%, EPS growth quarter over quarter of over 15%, and an institutional ownership over 50%. Now, if we go to descriptive, we can choose a sector to look at. So I'm going to start off by looking at the building materials sector. Doing that, we see that we have 3 companies here. Those 3 companies are going to be the companies in our top sector that have the fundamentals that we're looking for. So let's take these 3 sectors and see if there's any buying opportunities there. So first, let's look at gold, Kinross Gold Group. Or Barrick Gold Group, my apologies. So here we see that there was a double top breakout on August 18th. However, it's since reversed and has not moved very much since then. So to me, that's a no-go. But it's still a company in a top sector that is performing well right now. There is something to be said for fundamentals because stock prices will change every day. Stocks will go up and stocks will go down. But something that doesn't change every day are fundamentals. These numbers often change only once every quarter or so. So it's something that is very easy to write down and keep track of over a longer period of time. So let's do exactly that. Let's go over here to a basic spreadsheet that I've set up. There's no formulas, there's nothing. You can set this up just as easily as I have. All it is you write in the name, the ticker, the sector, the industry if you'd like, and then the signal. So that is a double top breakout on August 18th. So double top breakout on 8/18. And then what I like to do is I like to go up here, copy and paste the link to that page, because there's a lot of different websites out there that you can keep track of your companies. You can find your companies that are going up and your companies that are going down. But you can't find point and figure charts many places. So because I rely a lot on the point and figure charts, I like to have the links all right there. So when I come to look at it tomorrow, I can just click on that chart and see how that chart is doing. So I'm going to go ahead and do this for the 3 companies within our sector. So I've already done gold. Now let's do Kinross Gold Group, KGC, and see if there's an opportunity there. We're in a column of O's on our way back up, but we haven't had much information since early August. So I'm going to write that down. Kinross, KGC, basic materials, industry is gold, no signal, and then I will go here, grab the link, and paste it. The last one to show off this sector would be the Sherwin-Williams Company, SHW. Now here we have a breakout. And here's where we start to ask, is there still opportunity? So the opportunity is, there's no hard rule for it. Again, this is where it comes to you, where the higher, when a stock goes on a breakout, so we had our breakout here, right at the $700 mark. When a company goes on a breakout pattern, it's very important to know how far above it goes, because after the buy signal, we enter what's called the buy range, which is any percent above that buy price, where you could go up to 10% or you could go up to 5%, depending on your level of risk. But the one rule is, the further from the buy price you are, the more risk there is when you decide to buy in. Because once you've already broken through the ceiling, you're never really sure how high it's going to go before it starts going back down. Now, in previous classes, we've talked about how to use other sorts of chart signals to find this kind of indication. So this is where we can use our pivot points. Exactly, Eddie. So that's exactly what I'm going to do. I'm going to go over here to a new stock charts page. We'll go to sharp charts for SHW. We're going to clear this. Then under overlays, we're going to go to pivot points. We're going to see what we have. So here we have our pivot line for September, where we see that we are already above that second band. So not only have we broken out above the buy price of the second resistance barrier, 706.09, but you've also gone above the buy range of about 5%. Now, there are other signals that you can use to kind of have more technical analysis, but to find out more about that, I recommend coming to next Tuesday's class, which will be all about moving averages, simple moving averages, exponential moving averages, and how you can use those as part of your as part of your technical analysis strategy. But for today, what I want to show is just keeping it simple, because this is a process that you should go through often, of keeping up to date with your stocks, knowing where they are, and figuring out the risk there is. So in this stock, we're about $25 above the buy price, which puts us about 4% above our buy range. There's some opportunity still there. How much? Well, that depends on your level of risk. I am fairly risk averse. I don't really like risk very much, but there is still some opportunity here. So what I may do is I may buy a little bit. And that's exactly what I'm going to do for our paper trading portfolio. So I'm going to go here, and I'm going to go to make a trade, buy SHW. How many? Now, I'm not going to buy a lot because, again, this is something that there is more risk because we are already well past the buy price. But I want to have a little bit of skin in the game, so I'm going to buy 8 shares worth, which gives me $5,700 worth of the company. So I'm going to go ahead and confirm it. Eddie, so there's different types of pivot points. the standard pivot point equation will give you the ranges are based on the close and open of the previous month, where the actual bands are not determined by math, it's determined by the buy prices. So they will be very dependent on the overall volatility from the previous month of trading. However, the Fibonacci points use a mathematical equation to figure out how high those bands are, where it takes the pivot line and then multiplies that by specific numbers, decimal points, to figure out how high above it or how far below it those different lines are. Again, to figure out the exact math behind it and figure out why some are better than others, I recommend taking a look at the Chart School article that Stock Charts has. That article has all of the formulas that they use, which will show much clearer why Fibonacci points will be good in some times and normal pivot points will be good in others. So let's go back here and say that Sherwin-Williams, I've decided to buy 8 shares worth. So I'm going to go here, Sherwin-Williams, SHW, Basic Materials. I don't remember the industry. Let's see if we can grab that really quickly. Specialty Chemicals. So here, I'm going to say what I bought it at. So I bought at 716.25 on a double top breakout. And then once again, I'm going to take this chart and put it in right there. So this has been the materials sector. Now, I also want to go look at the sector that has the lowest BPI in a column of X's to see if there's any opportunity there. So we're going to do that using FinViz. We're going to go here and we're now going to choose the financial sector. So now we have 9 companies that meet our requirements. I'm going to very quickly go through them because I'm going to use the exact same kind of information that I just had, or the exact same process, to see where there's any opportunities. So co-op. Okay, there was a double top breakout last week, and we're still within our 10% buy range. However, it's starting to go down slightly. So this is one that I may, if I wanted to, I may put a small position on, but I want to see what else is out there. So I'm just going to write this one down, and we're going to see what happens. So I'm going to say, oops, that is the ticker symbol. Mr. Cooper Group. And here, what I'm going to do is for the P&F signal, I'm going to write breakout at $20. So double top breakout at $20. And then I'm going to highlight this as yellow because I want to keep an eye on it to see what it does from there. Just like for the stock that I just bought, Sherwin-Williams, I'm going to go ahead and make this green so that I know that I already own it. Just as something that I already own that I may be watching to see if I need to sell off early, I would put in red. So this is my way of knowing where I'm at and what my thoughts are. So when I come back tomorrow, I can look more importantly at the things I already own, as well as look at the things that I am trying to buy. There's a question in chat. Would it be helpful to use perf charts to compare the companies to each other in the same sector and see who's performing better? That's a great question. And that's really dependent on how you want to be looking, where there's something to be said for finding diverse portfolios, of buying multiple stocks. However, if you are looking at just buying one company, so if you wanted to find one or the other, yes, perf charts would be a great option for that. Or if you wanted to compare your company to the sector as well as to the market, that is another great option. However, right now, what I'm trying to do is I'm trying to take cash and I'm trying to invest it in different stocks and different companies. So I'm not really trying to look to see whether Sherwin is better than Kinross. I'm trying to see where the buy opportunities may be. So then, once I have an idea of what I definitely want to buy, what I may want to buy, and what I definitely shouldn't buy, then I can start to figure out using relative strength charts, perf charts, or other comparison methods to figure out what I really want to buy from there. One moment. Kira, so let's continue really quick. The next one I want to go to is Kinsale. So that is going to be KNSL. Now here is where I would say opportunity is starting to arise. So this is a point where the stock went up quite a bit, but then as quick as it went up, has bounced back down. So we're starting to see a very, very common chart pattern emerge, our triangle. So this is the kind of company that I would keep an eye on, not because there's a buy opportunity right now, but because the chart pattern is showing signs of reversing over and over, where when a breakout occurs, that's where the buy opportunity may be. So this is one, again, that I would be putting that little yellow marker next to. So Kinsale, KNSL, financials, we're going to say triangle. So PNF triangle, mark it in yellow to keep an eye on it. Oops, wrong yellow. And then we're going to paste this in. So I would go through all of the different companies and do this. For the sake of time, I don't want to go through every single one of these right now. I want to show you my process for a couple of them, because there's one other thing that I want to share with you guys, and technology is the best sector to see that. So let's go over to the third sector that we've talked about, technology. Why technology? Well, I like it. There's something to be said for you can find investments in sectors that you feel are leading sectors, but also sectors that you feel are performing very well. While technology has lost some strength in the relative period, companies within the technology sector have still been performing very well, and there are still opportunities within that market. But they might not come in where you expect. So I want to show one company in specific that if you were to look at this normally, you may not see. But by changing one thing in our check, you would find it. And I want to show how be a profit, while there are parts of it that you don't want to change, you can mess with it a little bit to get some really interesting information. So let's do exactly that. Now, when we covered Be a Profit before, we said how all letters are not equal. EPS growth quarter over quarter is our most important thing. Return on equity is very important. Our beta is pretty important because that tells us how relatively volatile the stock is compared to the market. But FinViz gets one thing wrong. If a company goes on a buy signal today, this number, the 52-week high-low, actually makes it so we don't see that company at all. And I want to show you that. So before I can, there's one other thing I need to change, which is institutional ownership. It gives us a good idea of where the hippos are buying and selling. But sometimes it almost will do us the opposite favor, where it may eliminate some options that we have where if you're trading actively, you may want to be looking at companies that institutions may just be buying into. So for the sake of curiosity, I want to change this to any, because sometimes FinViz doesn't have the information for the number of institutions that own that company. So I'm just going to put any. And we see that it doesn't make the list too much longer. Yes, it adds a couple, but it doesn't make it too much longer. But I changed that not because I want to look at 11 companies now instead of 5. I barely wanted to go look at all of the financials, but because I want to show you this. I'm going to go ahead and change the 52-week high-low, where instead of it being 0 to 10% below the high, which means if the highest price it's been to is $100, we only want to find companies that are currently $90 to $100. What if it's 101? Well, in the way that we have FinViz set up right now, you wouldn't see anything. So to see that, I want to go here to new high and see if we have anything there. Aha. So what does this mean? Why is this company appearing now and we didn't see it before? Well, this company, if we look at the chart, today had a breakout. It is on its highest price that it has been all year. And because that price change happened today, our 52-week high-low is above that 0 to 10% below the high, which means that our filter would leave this out, when in reality, this may be something that we want to look at. So let's do exactly that. Let's go look at it. Let's go over here, and we're going to type in TSM. And here we have two things. We have our triple top breakout right here. And there's been a lot of people that have asked me, well, after it goes on a double top, you talk about a confirmation. What is a confirmation? A confirmation is after it goes on a single breakout pattern, there are other points in the past that the price has reversed. Where if we look here, there was a triple top breakout, and then there was this little guy. That X right there was our breakout, but it was not a confirmation. It was a bull trap where after the triple top breakout, the price immediately reversed back down very hard. So what does that tell us now? Well, it tells us that now we don't just have this triple top breakout line. We also have, to a certain extent, this previous triple top, and to an even smaller extent, we have this double top, where as the price has gone higher and higher, it has broken past previous points of a reversal, or put another way, it has gone above where it previously stopped. So the price has continued going up above these other resistance points up to where it currently is. So that to me is very interesting to see the price go so far up, where the only reason that I'm not already in how the market works trading this right now is because it took off so quickly, where all of these changes occurred over a few days. All of the price jump that we've seen today, all of this has been in today alone. So I almost want to see how this company opens tomorrow. But I'll tell you what, this company is definitely making the list of stocks I want to keep an eye on. So let's write that down. It's in the technology sector, and we had a triple top breakout. What does short mean? Shorting is, instead of buying a company, which is taking a long period, or sorry, a long position, shorting means that you bet it's going to go down. Or that you are saying that if you short a company, you are betting that that company is going to go down. So if the company goes down, you make money. If that company's price goes up, you lose money. So it's kind of betting against the market in a way. So this is another way of looking where you don't need to just look at FinViz, look at Be a Profit and say that this is the last thing you need to see. Because sometimes there are other things very close to what we want. But because of the way that FinViz is, doesn't let us see that. Again, any companies that went on a buy signal today, and that buy signal is their new highest price, this filter won't catch. So setting new high may be a good way of finding those opportunities. Now, again, there is something to be said for the core fundamentals of Be a Profit, where EPS is the most important thing that Be a Profit relies on. EPS growth is the most important. Return on equity is very important. Beta for a longer term investment is very important. But because of the way the FinViz is, changing this to new high sometimes will give you opportunities that you may have missed otherwise. So that was the main thing that I wanted to show you all as the new piece of information, is sometimes new high will be the opportunity, will be your double top breakout opportunity that FinViz may have missed or not even shown you because of the way that this filter works, where it does you the favor of 99% of the time saving you the trouble of looking at things you wouldn't be interested in. But that 1% of the time, it's nice to know that the other options are out there. I want to quickly, before I go too much further into this, I want to see if anyone has any questions in chat, or if there's any companies in specific they want me to take a look at. Any suggestions, anything that people want to see? PRNB. All right, let's go take a look. Healthcare. Okay. So this stock, we don't have a lot of information on it, but let's take what we do have. We have an EPS quarter over quarter of 11%, which not great if we're looking at fundamentals, but let's go look at the price, where I want to see how it's done here. This is a great example here of a buy opportunity where there was a big triangle that emerged. And again, here is a great example of where I said that we have our alert and our confirmation signals, where here we have the double top breakout, which is our, in this case, bullish triangle breakout. And then we have our secondary confirmation after it breaks above the top of that triangle, right at the $96 mark. Now, I actually want to go back in time. I want to see what happened, to see how fast did this price change. Because sometimes it's easy to look at a chart and say, you know, I could have made money here, but it's not always that you could have caught it, because sometimes the price changes so quickly that by the time the buy opportunity has come, and it's already gone. So let's go back in time to August 17th. To do that, we go here to end date, August 17th. Romulo, we have a video on that already. If you go take a look at our members webinar on fundamental analysis, you can see me go through not only how to set it up in FinViz, but what all of the different pieces of information gave. So this is kind of what I feared with this kind of chart, where yes, there was a double top breakout and then a secondary breakout, but it all happened so quickly. There was never really an opportunity to buy somewhere in the middle, like right here. Oh, that's the wrong direction. Right here would have been a great opportunity to buy, but it jumped so far past that by the time we even got to see it, we were already up here at $100, which is close to the top of that 10% buy range. So to me, that's almost a scary sign of, well, the price jumped up a lot, but it hasn't gone up since. So it's been almost a month that the price has not changed very much. So while there might have been a good opportunity, had you known to buy it when it was down at $90 or so, it's already shot up to 100. That opportunity is passed, and it hasn't really done anything since. But that's a very interesting chart because it shows very clearly how price changes can happen so quickly, where just because a stock shows signs of being a good buy doesn't mean that there was even an opportunity for investors to buy it if they weren't already paying attention. And that's the trickiest part, is sometimes you'll miss the opportunity because you didn't even know the opportunity existed. Eddie is asking a question. When we're using the Be a Profit filter, should we be looking at the 52-week high according to the Be a Profit and then change it to any to see the possible new information? Any is slightly tricky because any will give you anything. Where, let's go back to this, where any all of a sudden will give you anything because this now is not saying any sort of 52-week high, where the price could be 50% of its 52-week high. Whereas what we want is we still want that 0 to 10% below the high, or we want a new high. So I specifically will go in and look at just the new high to see the opportunities that may be there. Let's go take a look at Ermelinda wants to see EW. So let's go take a look at EW. Ooh, lots of price movement on this one. First, let's look at the fundamentals. We have a very negative earnings per share quarter over quarter, which is a concerning sign. Again, not a deal breaker, but if you're buying a stock for the longer term, something to keep an eye on is definitely that longer term growth. Again, the reason that we look at fundamentals is we want to find some reason that that company is going up. We don't want to buy in because lots of people are hyped up about a company, because hype dies down, and when the hype dies down, so does the price. We want to be looking for companies that the reason they're doing well is because the company is a very strong company. But let's go further into this. So the fundamentals may not be where we want them to be. Let's look at our earnings per, or sorry, not our earnings per share. Our price to earnings is well above what the industry would be setting at. And our return on equity, okay, that's good. It's above 15%, fine by me. And if we check the high price, we are 5% below the highest price that it's been this year. Let's go look at the chart. So here's an interesting chart because it shows signs of approaching a double top breakout, where we're only one box away from a double top. But look at when all of these price changes were happening. The most recent information that we have, because we don't see a 9 here, we know that there's been no new information in September. So to me, I get worried when I don't have a lot of new information, because that means whatever caused this price jump has came and gone. Whether it was a good earnings report, which, let's see, mid-July, when was the earnings report for the, okay. Yep. That would likely explain why the price jump went up. Now again, this is where I say that good news will carry the price of a stock, but it won't keep that price moving up and up. It will give it a nice little boost, but as soon as that news dies down, the stock's price stops that momentum, which is where you would want the fundamentals of the company to go up. So this is an interesting one because, again, we don't have a lot of new information to go off of. Most of the information we have of why it performed well, you could say is due to its financial report that they released on July 23rd. So I really would not have much to say beyond that, sadly. Kike is asking, can we do the same settings in Chartmill like FinViz? Yeah, I think we can do that. Maybe we can do that for this Friday's webinar. I think that would be a good topic for this Friday's webinar. So, catch it then. But that's just about all the time we have for today. Again, I just want to review a couple things. Mainly that how the market works is a good opportunity for you to go in and try out different strategies. Take risks, try different things, find what works, but also find what doesn't. Because the whole point of it is that this gives us an opportunity to buy and sell in a way that we don't have to be worrying about losing a significant sum of money because we took a risk. This is the opportunity to try those new strategies, take that extra risk, and then see what goes from there. Is it still set? Oh my God. I am. Thank you. All right. I need to go back and look at this. Thank you so much for catching that. I mean, nothing changes, but you're right. I still was looking from August 17th. Good catch. It didn't change. Update. Okay. That's a little bit better. Thank you for that catch. So here we have a little bit better of a pattern. We have a triangle emerging where the stock's price is starting to go back up, and I would be looking for one main thing. I'd be looking for when this column reverses again, or when this column goes above that $88 mark. So you're looking for a bullish triangle to form, and then a breakout from that triangle, or you're looking for that double top breakout. Thank you so much for catching that. I apologize that I didn't catch that before myself. But again, I think that going into Chartmill and how that information supports be a profit as well as gives a way of comparing it will be something very interesting that we can try out. So that will be the topic of Friday's class. And then next week's members class will be all about technical analysis and how we can use other technical analysis indicators to find our buy prices and find our sacar un poco de nata points, just as we have done for point and figure. So thank you so much for joining us today. I hope everyone learned something new or found a new thing that they want to go explore. And I will catch you all on Friday. Take care, everyone.